Hello, everybody, and welcome back to Godspeed TV. I am your host, Riley Roseby, the man helping you navigate through this AI-enabled paradigm shift. Now, if you guys have been with me for a little while, you remember back in the early episodes, I had a nice little bell. I don't have a bell today. I haven't had a bell for a few months, but I have this little guy, this little, I don't even know what to call it. It's a bell of some sorts. Nino made in Thailand. Shout out to Hejong for hooking me up with that. Let's get on with the program though, because it is a seasonally weak time of year. I've been talking about it for about a month. If you go on Twitter, everybody and their mother seems to be talking about it. And here is a chart. Shout out JC for putting this together, the S&P 500 seasonality. Average monthly performance between 1950 and 2024. And I'm sorry, folks, we are in September. Haven't updated that highlighted bar, but you can see September is notoriously the seasonally weakest time of the year. But I have a question for us. What if we buck the trend? What if September is not the seasonally weakest time of 2025? Now, I want us to take a look at some longer term, kind of more macro charts. I shouldn't say longer term. These are daily charts, but this is the S&P 500. And let's really look at, kind of since the end of July, where we had some of this nasty action, those two, I guess you could have 4 red candles there right in a row. The S&P hasn't really done much. It really didn't do much in August. And everybody seems to be worried that September will be weak. I think it's irresponsible for us not to ask the question of what if we buck the trend. Now, this is the ARK Innovation ETF. This is an ETF that I like to use to really kind of just get a risk on, risk off sentiment, right? We're talking innovation. We all know Cathie Wood and her bullish thesis on Tesla, on Zoom. If ARK Innovation is flagging at these all-time highs, right? It's not breaking down. We're just consolidating sideways. What if we buck the trend? Now, last night we got some news. Google's monopoly is safe. The stock was up big, like 8% today. It was up 6% after hours as Google is allowed to hang on to Chrome. If you recall, we talked about Perplexity's wild bid for Chrome. Google will retain Chrome. However, it does need to share some of its data with its competitors. But we take a look at the chart. Look at this work of art. It is a massive gap and go from Google. Huge, huge move. And if Google is above this 220 level, we got to assume this thing's going to drift higher. The 220 mark is our line in the sand. We're above these former highs from 2025 or from the beginning of this year. You can see kind of right there, that end of January, February period. We're well above those figures, off to all-time highs. Do we think that the market is going to get shellacked if Google, one of the biggest names, and the entire market of stocks is breaking out to all-time highs? I don't think so. And then this came in just right before the close. Apple and Google reached a deal to evaluate Gemini model for new Siri. Apple plans to roll out AI search feature in Siri next year. Don't sleep on Apple. They have the distribution. Everybody has an iPhone in their pocket, it seems. And they're finally waking up to this whole AI trade. Next up, now we're talking humanoids. We're talking robots. I think it was 2 weeks ago, we did a little feature on the World Humanoid Robot Games in Beijing. And Unitree's robot, this H1 guy, was the standout. The company is planning to file an IPO later this year. Not a ton of details as to how that's going to look, but as far as the headline goes, we're getting robot IPOs. Let's just think about the risk on, risk off, the sentiment of the market. Like, I can't help but laugh when I say robot IPOs. This is real, folks. Q4 2025, Unitree plans to file its IPO. Now, China, that's one word, right? And I put a period there at the end for a reason. Because take a look at this China chart. This is the China Large Cap ETF, FXI, big move off of the 2020, kind of 2024 lows. Nice little double bottom, if you want to call it that. Right in line with those lows going back to the great financial crisis. We need to keep an eye on China because the Chinese are absolutely crushing it within the robotics and humanoid space. And just a little channel check. Over the weekend, I was at the golf course and I was chatting with some friends, and they were asking me, what do I like in the markets? And I said, guys, these Chinese tech names, the China tech ETFs, CQQQ, KWeb, these names look right. They look ready to rip. And I should note the folks I were talking to, probably in their 50s, let's say 50s, 60s, early retirement. They have questions about the market. They have plenty of time so they can take on some risk. But the moment I said China, they were disgusted. They couldn't believe that I was saying there could be an outperformance in Chinese stocks, which is a very, very interesting heuristic when we're talking about these Chinese names. There is a lot of emotional volatility when we're talking about China, especially in today's political climate. So if everyone is kind of dogging on China, not wanting to entertain the idea of China, this goes kind of into my contrarian thesis of what if seasonality bucks the trend, but what if everybody is not bullish enough on China? Now, I got to give a huge shout out to Straza and the All-Star Charts crew. They have been all over this China move. Are you? Are you prepared for China to outperform the US going into the end of the year? I think that is a question we need to ask ourselves. Here is the daily chart of the FXI. And we are just, knocking on the door to break out above these March 2025 highs. Excuse me. Again, let's look at the monthly, daily. We're looking for that time frame continuity. The daily looks fantastic. The monthly's got some work to do. But let's move on to nuclear. Nuclear had some big moves today. And I took this tweet off the US Department of Energy's official Twitter account earlier today. The United States is ready for a nuclear energy renaissance, and here is the game plan. This account has been tweeting about a nuclear renaissance, it feels like, all year. And for us to ignore that sentiment, I think, is irresponsible. And let's take a look at the VanEck Uranium and Nuclear ETF, NLR. What an absolute monster base. So this thing got listed, end of 2007, 2008. Tough timing to launch a new ETF. And we're still stuck below those highs, shortly after it was listed. But I chopped this chart up a little differently for a very specific reason. Take a look at the total dollar volume down there in the lower pane. Absolutely crazy uptick in volume. Now, this isn't grandma and grandpa buying. These aren't retirement accounts piling into the nuclear names. This isn't Tony with $500 in his Robinhood account betting on nuclear. This is some institutional capital. And I love seeing these total dollar volume charts, just go absolutely exponential, while the price of the ETF has really, kind of just traded sideways. This is a monthly chart. And I mean, today's action and yesterday's action in that most recent candle, we got to ignore. There's not enough action to totally close out a month, being 2 days. But look at July and August there. We really went sideways. And we're flagging right at those all-time highs. We've got to keep an eye on the uranium and nuclear names. Up to the flying cars. So Joby had an autonomous test flight with the Department of Defense. Joby completes landmark U.S. defense exercise with autonomous flight technology. It logged more than 7,000 miles of autonomous operations for more than 40 flight hours, demonstrated dual-use potential of Joby's technology, advancing both defense readiness and commercial market leadership, and generated mission-critical data to inform next-gen U.S. defense. Now, if we take a look at the Joby chart, this thing has gotten whacked a little bit. We had a big move earlier this summer. Stock went all the way up to $20. The SPAC listing price for Joby and Archer, if we recall, is $10. That is our line in the sand. Joby busted through that, ticked 20, and now we're down, what, 40% or so from those highs? This is going to be a name to keep an eye. And I'm really watching to see, do these highs, we have a little bit of price history here, but do these highs from 2023 and even kind of the highs from Q4 2024, will those come into play? Or will Joby find its footing before falling, all the way back to $10? That is a big question that we are waiting for an answer. We're talking about humanoids, right? Well, Tesla revealed its Optimus humanoid in kind of a interesting fashion, if I don't say so. Mark Benioff, the CEO of Salesforce, tweeted, Elon's Tesla Optimus is here. Dawn of the physical agent force revolution, tackling human work for 200,000 to 500,000. Productivity game changer. Congrats, Elon Musk, and thank you for always being so kind to me. Now, you should go check out this tweet. Go find Mark on Twitter. Watch this little video because the humanoids are here. The humanoids are here. And we've been talking about Tesla, and we've been talking about Tesla in the context of the robo-taxi operations. But now we're getting that change in the news narrative. Remember, over the summer, it seemed like anything Elon did, even if he was walking on the street, he was doing something wrong. And yeah, it could be warranted. He's kind of a crazy dude. But the stock stopped going down. It was up about 1.5% today. We're still stuck in this range, right? We're at 334. We've been kind of talking about that 370 to 280-ish level, 290-ish level. We're still trapped in that range. But if we start to see this uptick in these positive news catalysts regarding Optimus, regarding the robo-taxi program, I would not be surprised to see a gnarly move to the upside in Tesla. Remember, we just got to accumulate and wait on this one. And then let's look at Waymo, because Waymo is also in this battle for autonomous driving. Earlier this week, it announced it will be validating Denver and Seattle. And so let's just kind of take a step back, zoom out a little bit. Waymo is operating in 5 cities so far: Phoenix, San Francisco, Los Angeles, Austin, and Atlanta. However, it's validating. The LiDAR is gathering data in 16 different cities. We got Miami, Orlando, New Orleans, Dallas, Houston, San Antonio, Vegas, San Diego, Nashville, NYC, Washington, D.C., Jersey City, Philadelphia, Boston, and now Denver and Seattle. So Waymo is continuing to press the expansion lever. Who's going to win this race? It's going to be fascinating to watch into the end of the year. I'm sure it will not be clear as to who is in the lead going into the end of the year. And this will be a narrative to watch in 2026. How many of these cities that Waymo's validating, how many of these 16 cities that Waymo's validating will get up and running? Half? A quarter? All of them? We'll see. Time will tell. And then we got some headline heuristics here. So I took a couple headlines from TechCrunch, other media outlets, just to kind of put a feather in our cap of where are we? And this goes back, and I'm coming full circle. This goes back to the what if we buck the trend in seasonality. Let's take a look at these headlines. Orchard Robotics, founded by Thiel fellow Cornell dropout, raises $22 million for Farm Vision AI. That sounds pretty dang cool. As Amazon launches Lens Live, an AI-powered shopping tool for use in the real world. And then SpaceX gets a green light to more than double its Florida launches. So this whole AI trade is not going anywhere. We're talking about AI, space flight, flying cars, or better yet, advanced air mobility, nuclear energy. This is all happening, folks. Don't forget, there are 4 pillars to a paradigm shift: innovation in communications, transportation, energy, and manufacturing. It's all coming together. AI is a catalyst, and all these technologies will spur from the confluence of AI and the existing innovations that we already have, right? These eVTOLs are essentially an electric helicopter, only better. Folks, that is all I have for us today. My one takeaway, or what I would like you guys to take away for today, is let's ask the question of what if seasonality bucks the trend? Are we well positioned in our portfolio to capture a move that may surprise the entire street? Maybe it'll happen, maybe it won't. I don't have a crystal ball in front of me, but when everybody's leaning one way, I tend to go the other. Everyone, have a great rest of your day. Be safe in the markets, trade well, and respect risk.